Are you wondering what the interest rates are like now that we have officially entered 2024? Welcome to our channel where we bring the pulse of the market straight to your screen. Today, we're going to be diving into the latest trends and shifts in the real estate landscape. Whether you are a first-time homebuyer, a seasoned investor, or just curious about the market, well, you're in the right place. Stay tuned as we unfold the most up-to-date insights and tips to navigate the ever-changing world of real estate. Today, we want to give you a quick update on what we are seeing in the real estate market, specifically around the interest rates. We continue to see mortgage rates decrease prior to Christmas. Now, of course, this does not even include the rate cuts that the Fed is planning for 2024. We have been seeing the 10-year Treasury note around 3.85% for the last week or so, and that's a welcome change from October, where that rate was actually hovering near 5%. So what does this all mean? In the coming week, we are due several important economic reports which can bring some volatility into the rate market. What we do know is that the lower rates, they are bringing potential homebuyers back to the real estate market, and that can be both good and bad. And it all depends on whether you're a seller or a buyer.
Love that.
Sellers, we can definitely tell you that you can enjoy the competition of more buyers. And buyers, well, you are looking to have more competition since the inventory is still very low here in the Treasure Valley. In December, we saw the mortgage rates stayed below 7% for several weeks in a row. And that was a welcome relief because we had 17 weeks streak of above 7% rates. Heck, we even entered the 8% for a short bit a few months ago in October. The 30-year fixed rate mortgage averaged 6.61% as of December 28. And that's a slight decrease from the 6.67 rate that we saw on December 21st. And that's according to Freddie Mac's primary mortgage market survey that was released this past Thursday. 1 year ago this week, the 30-year fixed rate mortgage stood at 6.42%, while the 15-year rate was at 5.68%. And that's reflecting a slightly stronger rate environment ahead of the increases that we observed throughout 2023. So what are the experts saying? Freddie Mac's chief economist Sam Cater said in his most recent statement, "Lower rates are bringing potential homebuyers who were previously waiting on the sidelines back into the market, and builders are already starting to feel the positive effects." A rise in home builder confidence, followed by new home construction reaching its highest level since May, signals a response to meet heightened demand as current inventory remains low. And Warren Cornfield, he's the Senior Vice President of the Financial Institutions Group at Moody's, and he added that he expects rates will moderate down to about 6 to 6.25%. Now here in the local Boise and Treasure Valley market, we are seeing a little sluggish market. And that is a result of sellers coming off the market for the holidays because they did not sell in the first 30 days when they first came on the market. Now the average days on market for resale properties is 36 days, which is up 12.5% month over month, but down 16.3% year over year. Though we are still in a low inventory market with just 2.2 months worth of inventory, the holidays definitely made its mark. With Christmas and New Year, the absolute serious buyers, they are out. Last week was the first week in a while that we saw buyers at homes that we showed both before our showing and immediately following. We get it. As a seller, we understand occupying your home, the stress of making it available for showing at a moment's notice during the holidays could be a bit of a challenge, but now that we are in January, we anticipate a sharp increase in both buyer traffic as the rates are getting better and more manageable, and there are sellers that are going to have to sell, so they're more inclined to make a deal with buyers. Lisa Sturdivant, she is the chief economist at Bright MLS, and she said in the following statement, "Lower rates will have a positive impact on affordability," and she does forecast the average on a fixed rate mortgage is going to fall to about 6.5% by mid-year and to decline further to 6.2% by the end of the year. Now, with a rate at 6.2%, the typical monthly payment on a loan for a $400,000 home could be about $2,700, and that's down from $3,000 with a 7.5% interest rate. But the real obstacle that we're seeing here in our area is still the lack of inventory. The scarcity of homes available for sale has kept prices elevated. In 2023, many first-time homebuyers, they had to delay their home buying plans as they scrambled to save enough money for a down payment. Now, some prospective home buyers were simply priced out of the market. We had several of our clients that had to put their home buying on hold, and now they're back talking with us and getting their pre-approvals updated because they want to be ready once the right houses come available on the market. Now, Lisa Sturdivant also said the following: while declining rates is positive for home buyers, the lack of inventory, both because of the deficit of new construction and because existing homeowners are remaining in their homes longer, will continue to be a challenge in 2024. Here in our local market, we are quite fortunate because we have new construction going on. And though it's not as strong as it was in the past, when inflation spiked, some home builders actually pulled back some, but you're going to start seeing new projects pop up all over the Treasure Valley once again, and that's going to be positive for our housing economy. With 85% of homeowners having a sub 5% interest rate on their mortgage, we also have to point out that 69% of those that have financed homes in the US have a minimum of 40% equity in their homes. So a combination of the two, a low rate and equity, sellers, they are still kind of hesitant to sell. However, there are opportunities for homeowners to use their equity in their homes to build their real estate wealth. If you are a seller thinking about selling your home in 2024, let's go ahead and have that conversation now to see what that would mean for you. Once more sellers come onto the market, the competition will be there for you, and that's going to potentially have a negative impact on your bottom line. Give us a call when you are ready to schedule your seller strategy session with us so we can determine if now is going to be the best time for you to sell your home. We look forward to helping you reach all of your real estate goals here in 2024.